Yeah, what's up guys, how are you all doing? And please, if you're new to this YouTube channel, make sure you subscribe. Please make sure you subscribe to my YouTube channel so that when we're having new video, you'll be able to be notified. And again, in this video, I'm going to be teaching you where to place your trade and how to exit in the markets. And listen, most of you might be catching up trades. Why then you don't know exactly where to exit in the markets? And you know, most of the times all these things are very big confusion and you end up losing your money. So in this video is where I have made like a step-by-step like comprised information, whereby when you watch, you'll be able to know where to exit, where to stay and where not to stay, when to exit and when not to exit. So if you have any question in the course of this video, please leave the question in the comment section and I'll reply you. And make sure you watch this video to the end. It will be able to teach you more on where to exit, where to place your trade and where not to place your trade, so that you save yourself a lot of time and money. And remember, money is time and time is money. So let's dive into the main video where I show you guys what it is. Bye. Cheers. How are you all doing? You're welcome to my YouTube channel, and today I'm going to be teaching you where and when to exit from the markets as a forex trader. And if you're new to my channel, please make sure you subscribe to my YouTube channel. At least it will give us a kind of more effort for us to reach to our goals, and also to reach many traders out there who wants to really learn how to trade. So in this episode, I'm going to be teaching you where and when to exit as a forex trader. So let's dive into this video while I show you where and when to exit. So I have already pulled up an Ethereum pair, Ethereum versus USD. If you look at here, you see it. And looking at my screen, I have already back forward it so that we can back test, then show you some things. So let's say we have an Ethereum chart, Ethereum versus USD charts. Then we notice that mainly looking at things at the moment, we see that Ethereum is about to pull back because this is daily chart. Okay, for those of you who understand what I'm saying already, if you're not new, pay attention to what I'm saying. So, but if you're new, you can go back to our previous video that we have made on my YouTube channel. You're going to see the basics of forex and how you can enroll into our class and do whatsoever we're doing right now. So if you look at here right now, you notice that we are on a pullback. This is the internal on daily, and this is our major low. Right now, because we are in a pullback, we are not going to be searching for a buy position, but we are going to be searching for a sell position. Right now, if you look at right now, you see that the daily is on pullback, and this is our low. This is our major low. This is our major low, and this is where the markets change character. Okay, so this is our change of character here, and this is our major low. So for me, I like to just make it visible so that you guys will see it. Okay, so and this is our highs, these are our highs. So when you look at the market, you properly see that the market is about to pull back. So as a trader, what you want to be doing is to know, okay, where am I to enter this market and where am I to exit, when am I to exit and when I'm not to exit. So these are very important things for you to understand as a trader, and this is what I've come to show you in this episode, so that when you look at the market, it will be very easy for you to tell, okay, this is where I'm going to exit, or this is not where I'm going to exit. So first thing first is this. When you notice that our daily has changed character. So when we talk about change of character, we are talking about reversal. This is what it means, a change of character. Now when you look at the daily right now, it has changed character. So if the daily does not have an internal Okay, if the daily does not have an internal structure like this, then you can really tell that, okay, the high is probably at the next high here. But if the daily has an internal, then you can choose the internal and use it for what? And use it for your swing high under 4 hours. So right now we have a swing high that we don't want the market to violate. Okay, we don't want the market to violate that swing high. But if there is any reasons that the market happen to violate this swing high that we see here, which is an internal swing high on daily but a major swing high on 4 hours, then we can properly say, okay, we don't want the market to violate this swing high. Okay, because if there is any possibility that the market violate the swing high, then that means we'll continue to be trending high. Okay, then it is not a proper place for you to place your stop loss. So let's say I see the market this way and I know that, okay, I might probably be joining the pullback, because if I'm to measure my swing high to the swing low with my Fibonacci, then I'll probably understand that, okay, the market has not gone to 50% zone. Okay, this is 50% zone. Luckily the market have gone to 50% zone, but it has not shown us that it is ready to buy yet. So as a trader, what do? Now you have considered this thing, that your major internal high is here. So if I want to join this trade, what will I do? Now let me pull up my short position. Okay, then I put my short position that way. Then I will now look that the internal is respective. It is not violating, because when you look at the internal right now, it is just using a very what do we call it, a weak candlestick to be threatening those spots, just to lure people to buy more. But when you look at the full picture of it, you see that we are still on a pullback and we want to sell the pullback. We don't want to buy. So the things I consider is this: for the fact that we have two internal that is showing here, which is 1 and 2, then I will make sure that if I'm placing my stop loss, it doesn't go above that that's 1 and 2. Perhaps I'll just do it from that upside, okay, just for me to be safe in this market. But on my own idea, I don't do it this way, because this is a lot of stop loss. So I count this 1-2 candlestick, then bring it low. Yeah, because anything that violates this candlestick to get to this height definitely is a bullish candle already. So what do? I'll just set it there and leave my target to be beneath that zone, because this is where I want to get out from the market. So let's see if our predictions was right. So boom, our prediction was right. So if you look at here right now, you see that the market came back and liquidate these people who wants to buy, even with a body close candlestick. Who does that? That was with a body close candlestick. So these have to let you know that, okay, they wanted to take it high, but there was no possibility. Then it came down. So if you look at this place right now, we properly predicted exactly where our price has to get to. But if it violates that zone, then it can probably take us out. We have no problem with it. So now what are we seeing in the market? Now we notice that there is a continuation in trend, which means a break of structure. For those of you who have not understand this concept and understand this terminology that we use on our charts, on the things that you see here, then I'm going to make a video on it. But I've previously made a video on it explaining on these things you see now. The only thing you can do is just go back to my previous video. You get to watch those videos where I say much about all these things I'm teaching you guys right now. So what do we do next? We have exit the market. Now the next one is what we call the choppy market. Now in the choppy market, most of you know it as consolidation market, and consolidation market simply means when the market has no specific direction, like when the market trade high and trade low. And in this situation, it is when not to trade. Yeah, because if you trade in the choppy market, definitely you are giving it back to the market. So let me give you illustration with a diagram. Okay, let's say we have a bearish move, okay, and it got to a point we started seeing something like this. The market trends high, trends low, come back again. So in this point, this is when not to trade, because what you see here right now is what we call the choppy market. Now the choppy market simply simplify that when the market has no specific direction. And when the market has no specific direction, we are not trying to jump inside the market. And when do you get to know? Now, this is when I get to know when not to trade in the market. And this is what I'm going to show you from the charts. So let's take, for example, what happened here. Okay. So if you look at what happened here, this is what we call the choppy market. At this point, the market is going high and dropping low, going high, and finally drop to the downside. So how do I properly trade in this kind of market? Now, number one is this: you need to understand where your swing highs and low is, because the place where we always have a choppy market is on these 50% zones, and most of you might have fall victim of 50% zone. And 50% zone, where you get it is when you take your Fibonacci from the swing high to the swing low. So the red thing you see there is my 50% zones. Okay, so when you go to the lower time frame, you also see that this is a 50% zone where the market is always showing a consolidation. So when I see a consolidation in markets, I wait, I check if that zone is a 50% zone in a daily, in 4 hours, or maybe perhaps in 15 minutes. So these are things I check. So when I check and I find out that this is 50% zone, the two things I do when I get to 50% zone is this: it's either I wait for the market to change character or I proceed with my trade. So right now our market is on 50% zone on a daily, right? So when you look at on a daily, this is what I wait when the market is on a 50% zone. So number one, I have to find my high, which is the internal high, and find my break of structure, which is this. Then what I do is this: if the market have not taken this high, I'm not trading and I'm not searching for a buy. Why? Because there are possibility that we might come down here, okay, then trade to the downside, right? And there are possibility that we might also liquidate here and finally sell to the downside, of which this is what I don't want to do in the market. So when the market is on 50% zone, I don't trade the financial market, except I see something very significant that will prompt me to enter into the market. Okay, and what is those things? Is either the high is taken out, which is the internal high, or the low is taken out, giving me a proper direction on when and when not to trade. So these are things I consider. It is not a big thing for me to consider, because if I did not do these things, definitely I'll be giving it back to the market. So if I'm not really into this market, I will not understand these things I'm teaching you right now. So this takes us to the last one, which is what we call the pullback. Now, many of you in this trade might not understand what this word is. Okay, this is what we call pullback. Many of you might not understand what this really means. Now, pullback is when the market is about to reverse and correct a movement. Now, most of you think that it is a change of direction. Change of direction is not pullback. Change of character is not pullback. Some people misunderstand these words. Now, this is what we call pullback with a diagram. Now, let's say we also have a drop, which is a bearish move. Okay, so within this bearish move, we might have what we call an internal structure that is very small, because for a pullback to begin, it has to start with the internal structure. Pardon me, let me remove something from my camera. So we have to probably start with an internal structure, and if we do not start with an internal structure, definitely we might not know exactly what the market is doing. So what I consider in pullbacks are this. Number one, there has to be what we call an internal structure that will give me a proper guide on what the market is specifically doing. So let's say this market is about to pull back right now. How will I know? So number one, I'll say that, okay, my internal structure is also bearish, right? This is bearish. So if I see my internal structure behaving in a certain way, like taking this high out, okay, and giving me a change of character here, a change of character is a reversal. So when this internal structure starts reversing, then I will know that a pullback on a major structure has begun. Okay, because right now this is our major structure, right? This is our major highs, and this now becomes our major low. Okay, and one thing again to consider in this pullback before I'll forget is this: if the internal structure is not removed yet, if the internal structure is not yet removed, you cannot have your swing lows. Okay, if this internal structure have not changed to bullish, then you cannot properly call this your swing low. Why? Because you don't know if the market, okay, maybe probably the market gets to here, or maybe gets here and liquidates this low, okay, and come back again, continue the trend. You don't know yet. So you have to allow the candle to close properly and to show you that, okay, this is a proper change of character from the lower time frame. Then you can really tell that now the market is about to pull back. So let's say you are in a bearish move on a lower time frame, okay, then you don't need to be trading this kind of thing. You don't need to do that and you'll be like, okay, I want to trade a sell from this zone. You don't need to do that. So this now brings us back to our topic, when and where to exit. So at this point is where to exit, and it is when to exit, because you cannot just start placing a trade from this zone. You can't start placing a trade from this place right now, because if you place a trade from this place, definitely it is going to be taking you out with a stop. And when it takes you out, what are you doing at the moment? You have lost the money. So what you have to do right now as a trader is this: it's pulling up your Fibonacci from the swing low to the swing high. Now you are set to allow the market to do whatsoever it wants to do and give you a proper direction when it comes to the 50% zones. So this now brings us to the end of our video. Please, if you're a newcomer in this my channel, please make sure you like and subscribe to my YouTube channel, and also don't forget to share with your traders, with your fellow trader friends who wish to understand these kind of things that we are showing you right now. So, and don't forget, my name is Emmanuel, and whatsoever question you have, please leave it in the comment section. We are going to be making videos on those questions so that to clarify you on what to do as a forex trader, and when to exit, where not to exit, where to stay, and where to take your profits in this market.